You're tuned back into Agriculture Today, and we continue our show and conversation on the grain market with K-State grain economist Dan O'Brien and the senior economist at the IGP Institute, Guy Allen. Dan, as we continue talking about the grain market, moving on to grain sorghum and what are we seeing domestically?
I think two things that I'm watching. The first would be what the acreage report will show us. We heard a lot of discussion across the state about acres going back and forth to whatever, and so I'd be really curious to see the trade-offs on non-irrigated in particular between corn and grain sorghum, and in particular out here in western Kansas. I would also say that the supply demand balance sheet was virtually unchanged, and but I guess buried within that balance sheet for old crop, we're projecting 100 million bushels of exports, and we're we're we'll be challenged to get to that. I wouldn't be surprised if we're more like 75 or 80, but we'll see what happens, particularly if China would re-enter in an aggressive way. But right now, it's looking like we'll come short. But then next year, projecting 250 million bushels, a tremendous return to healthy markets, and China had to be a big part of that. So right now, projecting into the future, that's what you got for grain sorghum. And if you want, I'll just go on into soybeans, Shelby, if you'd like.
Go for it.
Okay, go forth. Okay, very good. So virtually no change either in the soybean supply demand balance sheet. So what we said before about corn and grain sorghum holds for this too. Again, we'll be watching that acreage report at the end of June as a big issue, and whatever weather would bring us out into July and August domestically. Other than that, if there's any news happening in soybeans, it's all in the international market, Guy.
Well, not much news there either, Dan. USDA increased expectations of ending stocks for next marketing year, 25-26, by 1 million tons to 125 million tons above, and that's just above last year. No change in soybean trade estimates for this current marketing year, steady at 181 million metric tons. We're sort of missing China there, but our beans are finding their way into other markets, and they're a bit more optimistic than I think a lot of people had thought. China's imports, they left unchanged at 108 million metric tons. Crush was dropped a million metric tons to 103. But next marketing year, they're expected to be at 112. Now, just to comment there sort of on the China situation, they have been building domestic inventory and stocks with Sino grain purchases. And that's that difference between imports of 108 versus crush of 103. So they are building some inventory. Now, China's not counted. When you look at major exporters, that inventory, growth in inventory is not counted. But looking at major exporters, ending stocks to use, current marketing year, 25%, which is quite loose and comfortable. It is expected to tighten up a little bit to about 24.9 next year. Look, both of those are quite comfortable numbers. So, look, I don't see any joy in that whole oilseed complex, to be honest.
And while we're on, Guy, with you, always wanting to talk about some macroeconomic things that are happening, and beginning with what are we seeing for currency?
Well, currency's made some big moves here in the last week. We've dropped down to just below $97 on the U.S. index. That's given some strength to some of our customers' currencies. Should be supportive of commodities, and we've seen a bit of that support coming in. So yeah, that move, that's the lowest level we've seen since March of 2022. So that's a good sign if you're long commodities, and also I'd say if you're an importing country, I think that's reflective of the expectation the Fed could lower interest rates, as well as maybe some poor economic news out there. Again, that would support lowering of interest rates. Uh, just on that, on the geopolitical, well, let's talk about ocean freight first. Let's move to the ocean freight situation. It's quite different than the currency situation. We've seen a bit of strength there in that market. Trying to find my
And if ocean currencies are strengthening, that either would show we've got shipments happening now in the world economy, some
Yeah.
underlying strength, or the anticipation that it's going to come on with this tariff issue unwinding. Am I
But
thinking correctly?
what's been driving the ocean freight? It's up at 1738. That's the highest levels since we've seen since last October, November. And we're seeing more purchases of coal and iron ore is what's been driving that. And that's sort of an indication, I think, that maybe China's economy is recovering a bit. It's just really hard to tell what the situation is over there. I was just over there a week ago, and the economy, you just don't see the people out and the economic activity, but you just, without any data coming out, it's just, even if you question the data, it's just hard to tell. I think the other optimistic thing in that, I think, is the announcement that at least we've got the terms of agreement in place, just waiting for Trump and Xi to sign off on that. I'm not as optimistic as some people. There's still a few, I think, showstopper points in there on access to technology and some other things. But at least they seem to be making progress after they came away from London last week. And I think that's reflected in both the currency and particularly in the ocean freight on that.
Yeah, you mentioned that you're just recently in China, and what was kind of the attitude you were feeling over there?
Well, I was over there with USEC, the soybean guys, doing a risk management merchandising sort of workshop. So I got an opportunity to talk to a number of traders. And look, traders, no matter where you're at, I think they're all a bit frustrated on the just the uncertainty of things, particularly on the tariff rates. Um, the tariff rates, though, I'd say is those can be managed. It's not an execution issue. It's just, well, what's the price? How's that impact the price and the trade flows? And then, who's responsible for paying that's pretty cut and dry. The bigger issue with more uncertainty is this U.S. Trade Representative Action 301 effort where they want to tax Chinese made or owned vessels. And that application, they've sort of worked through it. Their initial resolution that sort of exempts dry bulk shipments, which is most of your grains below 80,000 metric tons, it was a good move, but there's still a lot there that needs to be sorted out, and that's more uncertain. That one would be a lot harder for the trade to manage, and it would have a significant impact on your lower valued commodities, your dry bulk like corn, beans, wheat, coal, iron ore, as compared to what's coming on a container ship on a high dollar value commodity. And that's the one I think that the trade and the industry itself is probably struggling with a bit more of a concern.
And,
It's a
and
bit
if
more
I
complicated.
And if I can add in that there's a difference in the what's stated as the agreed upon tariffs that the U.S. would charge Chinese products versus Chinese products, but at least the explanation I've heard is that China also has, along with tariff rates, they have a lot of non-tariff barriers. Phytosanitary, what qualifies to come in, and all sorts of things. So the tariffs are only part of the story as the U.S. and China wrangle with one another in terms of making sure that each country has access to the other's goods.
Yeah, no, that's right. And I think the good thing is, look, at least they're talking, moving in the right direction. So that as we've seen a shift in the market optimism on that, and I think that's reflected particularly in the ocean freight.
Are there other issues or concerns that you guys are currently keeping an eye on when it comes to the grain market?
Well, I guess I would think that we're um, watching, well, the weather right now, weather front and center for us. There's some uncertainty, at least in my view, of what the final size of the second corn crop will be in Brazil. There's some weather issues that go up and down with regard to the crops coming out of Argentina. The ongoing conflicts in the Black Sea region are a conundrum to me. And Guy, I'll make a statement. You could respond to it. I think the world had been through that time when, gosh, we ran prices way up in because of Ukraine-Russia conflict, and now after that time frame, and they saw how the UN, other countries got involved. I think they're just trusting that even though that there's a conflict, that we'll move heaven and earth to make sure grain still comes out of that region of the world.
Yeah. The just on that, it's a lot of the trade, particularly in export and the cash markets, is very much nearby. There's not a lot of forward structure in that. What's sort of compounding that's the tariff issue and the 301 action issue is it's very nobody wants to put out a forward strip of prices, bid or offer, just because of the uncertainty there. We're sort of seeing that to some extent in our domestic markets. When you look at Chicago, corn's the difference between July, September, old crop, new crop is about a 12-cent inverse. So in an inverted market, all that trade, it basically happens nearby. And I don't think we're going to see a repeat of last year's situation where growers carried a lot of grain over unnecessarily, because that's a pretty healthy penalty. Even when you're looking at soybeans, that inverse has come in a bit. Today we closed at about a 20, well, it's still about a 24-cent inverse between July and September. Again, that's a big incentive. Make sure all your old crop stocks are cleared up, and anything that comes off early maybe capture a bit of that premium. But it makes all that trade activity happen in the nearby, where wheat's quite different from that, being in a big carry.
Well, then, if I can add in on that, in real limited time, you look at the volume on yesterday's trade on Thursday, and the open interest volume and open interest 517,000 contracts in the Dece contract versus the July contract 456. Then the volume was like 160 thousand contracts traded yesterday on the like is that the 22nd? Yes, it's the 20th, I believe that's right. But then the actual trading volume for December was half of that, 78. So people have their positions in the Dece contract for protection, but most of the trading still happening up front in July, September.
Yeah. Yeah.
Dan, Guy, I appreciate you both taking the time to join us today.
Thank you very much, Shelby.
That was K-State grain economist Dan O'Brien and the senior economist at the IGP Institute at K-State, Guy Allen. We're cutting to a short break now on Agriculture Today, but we'll be right back.